Hi, I'm Jennifer Goodman, Realtor in Austin, Texas, and I'm here today with Sean Andrew of Vista Lending. And if you have ever considered getting a jumbo loan for the purchase of your house, we have some things that we would like to share with you today. Sean.
Yes, ma'am.
First of all, let's talk about the definition of a jumbo loan. Some people may not be familiar with this term.
Yeah, you bet. So a jumbo loan is no different than any other, what we would call conventional loan product, meaning it's not a government insured loan, just your standard regular old 30-year fixed. There are adjustable rates. We can talk about that in a bit. But what it does mean is that the loan amount is higher than Fannie Mae or Freddie Mac's conventional loan limits. So every state has a unique loan limit. If you're on the West Coast or East Coast, those are considered high cost mortgage areas. The loan limits are higher than we are in Texas. And Texas is a bit misconstrued. They look at census and MSA data. Well, Texas is a large flipping state. So if you live in Dallas, San Antonio, Austin, Houston, you have high housing prices, but we have an equal population outside of those large cities that are in more rural areas where it's pretty darn cost effective to live. So when they look at that census data and the MSA tracking data, they come up with a loan limit for the entire state, which is, as of today, they change it annually, usually goes up every January. This year it moved up to $548,250. So
it's a nice round number.
Yes, always. It's kind of interesting. So anything above 548,250 is going to be a jumbo loan. And you know what's interesting about jumbo loans, I've been doing them forever. It's been a thing forever. But what's happening in Austin, and I would say the other metro areas in Texas as well, as more and more homes are increasing in price, more jumbo lending is taking place. Years ago, I might have one jumbo loan every other month. And now it's half of my production could be jumbo in a given month. And when you have $1 million homes, that's what happens. So unless you have $500,000 down, you're going to need other alternative lending than just your normal Fannie Mae, Freddie Mac conventional products. COVID had a pretty disastrous effect on jumbo lending, and it is reversed. But when we saw COVID really get bad, June 2020, starting in May, many of these investors, and when I say investors, I mean people that will buy a mortgage loan from me after closing. So that's the way the whole system works. I lend my money, I sell that loan to an investor who's going to service that loan for the life of the loan. I get paid my loan amount back so I can go lend again. Same thing with Chase, same thing with Bank of America. So we saw investors on jumbo loans pull out of the market. I mean, big ones, Wells Fargo, we're not doing jumbo loans anymore. They felt it was so risky, even though jumbo loans require, in most cases, higher down payments. We'll touch that in a second. Just going to get some backstory here. They felt it was too risky. These are loans they cannot sell to Fannie Mae or Freddie Mac. So they're going to sit on that bank's books or that investor's books. And they were afraid, when you had 2 million people losing their jobs in a month, that what if we do this loan for Sean? Yeah, he put 20% down, but he loses his job in 30 days. Now we have a loan that he may or may not be able to pay on. It's just too risky, especially with low rates. It's just not worth it. We don't want to invest in these. So they pulled out. So we just, for months, had a handful of lenders that stayed in the market. They all increased their credit score requirements. They all increased their down payment requirements. They made it almost impossible for somebody who's self-employed to get a loan. And that was kind of the lay of the land for about a year. About 6 months ago, they re-entered the market. So almost all of them have. Rates are still low. Most of them have come off 25 to 20% down. I have options for 10% down. And rates are great, low threes on a jumbo loan. So from a definition standpoint, there's definition plus a little historical context due to COVID.
Okay, so let's talk about today, because it's the present.
Yeah.
and a jumbo loan may be a present. So what is the gift of the jumbo loan in today's market? What credit score do I need for a jumbo loan? Let's go to that
Yeah, there's
part
not
first.
one magic answer to that.
Okay.
Again, investor, and that's what's very different from conventional. When we say conventional, Fannie Mae, Freddie Mac versus jumbo, they make up their own rules. So on Fannie Freddie, I run the loan through an automated system and it kicks out a yes or a no. Well, Wells Fargo, Chase, Redwood, Goldman Sachs, Citi, Bank of America, all these jumbo lenders have their own programs. So certainly when working with a lender, you need to be sure that they understand the programs, because everyone has different debt ratio requirements. Everyone has minimum credit score requirements, and then a grid of what down payment they require based on credit score. So it's kind of all over the map. I will tell you, they're geared to higher credit. So
Sure.
certainly most jumbo lenders want a 700 or above. They're going to want a higher down payment at 700 than they're going to want at 760. And then rates change, just like a conventional loan, depending on credit score, down payment requirements.
Okay, so your credit score and your amount of down payment work together, basically as
Absolutely.
part of the equation, if you will. And do I need to be a W-2 employee now?
No.
Okay.
So self-employed, we still have what we call overlays, additional work for me, for them, whoever we want to say. But, you know, for self-employed, no, we do them all the time. Self-employed, I'd say the biggest catch is they're really analyzing your income over 2020 due to COVID. If I was a restaurant owner, 2019 was great. They always want a 2-year history on self-employed. So 2019 was great. And then, 2020 hit, COVID, I was shut down or marginally open, and my income went down significantly. Due to that event, you're kind of stuck. They want to wait and see until how 2021 has done, and then they're going to average the income over those years. They're making self-employed people. So if I didn't have an issue, 2019 was good, 2020 was good. They're now making me, which is something they didn't used to do a year-to-date profit and loss for 2021. So literally show, here's how much I've made in 2021, here's all my expenses, here's how much I've made year-to-date, and they want to analyze that year-to-date income to your historical earnings to make sure you're still solvent, the business is still a going concern, and they've kind of done their rigorous analysis and make sure it's a good deal. Excuse me.
Okay, so then our minimum down payment on jumbo loan is 10%, correct?
Mhm.
Okay, and there's my understanding, and help me along here. My understanding is that you also have to have 6 months of payment reserves and your closing costs when you are applying for that jumbo loan, correct?
Yes, again, each investor will make up their own rules.
Okay.
I do have ones that only require 3. Again, there is no magic answer to a lot of this because it's really a matrix. If you have a 760 credit score and you're putting 20% down, there may be no reserve requirements.
Okay.
If you have a 720 credit score and you're putting 20% down, then yes, they want 6 months reserves. I apologize. When we talk about reserves, one thing that's important is it's not necessarily liquid cash sitting in your checking account. Certainly any stocks, mutual funds, or certificates of deposit you have apply to reserves, but then also retirement accounts. So most folks that are W-2 that are getting a jumbo loan have been saving for their retirement. That's pretty common. Very few don't. So 401k can be used for reserves. So they may empty out everything in their checking and savings towards down payment and closing costs, and we use the reserves via the 401k or an IRA or stock and mutual funds.
Okay, and if I'm a young person, and I'm looking at buying my first house, it's in Austin, Texas, and I want to be there for quite some time, and I'm looking at the $1 million plus range. Can Bank of Mom and Dad gift me funds toward that jumbo loan?
Again, yes and no, depending on investors. I have options where a gift is completely allowed as long as the borrower has 5% of their own funds in the transaction.
Okay.
So you got to put 5% down. That has to be sourced. It came from you. But then if you get a gift from family, that's completely acceptable.
Yeah. Okay. It's because I know and we didn't talk about this previously, but and we can do this on another day, but gifting funds is a whole other separate discussion that I would love to have with you, because there is something to be said strategically for passing along intergenerational wealth and down payments. So it is good to know that as long as I have a percentage down, 5% down for jumbo, that is my own, that can be tracked and traced, then I can still accept any gifted funds, not from the Prince of Nubia who just discovered me and sent me an email,
That's right.
but real family. And then again, it's traceable, et cetera, and it sits in my account.
Yep.
Okay, so that's very cool. What about crypto?
Nope.
That doesn't include,
I
that
say
doesn't
no
count as an
because I haven't
asset
run
class
into
right
it.
now? If I'm
No,
looking at my assets and 401ks, et cetera?
there's no clear guidelines yet, but crypto is to the point where it's so accepted that if it is through a traditional brokerage account and you can document it and there's a value to it, absolutely. It could be counted towards reserves. It could be your down payment funds as long as you liquidate it and it shows up in cash. So I would say previously when crypto, before brokerages started managing it, there wasn't a way to provide statements and a history on it. And so much of what we do is tied to the Patriot Act, tying back to 9/11, protecting against money laundering, drug dealing, and terrorism. And if we can't clearly trace, source, and document assets, then we can't use it. Just like cash. If I have $5,000 cash under my mattress and I go deposit it in my bank account and I go apply for a loan, that underwriter is going to say, I get it, you got 5,000 in your bank account, but for underwriting purposes, I'm just going to delete that. I'm not going to look at it. I don't want it to be part of your cash to close. Prior to brokerages handling crypto, same kind of thing. I can't source it. Okay, you've got a key, you've bought this, but there's no institutional statement on it that shows here's the value, beginning of month, end of month, etc. Another thing that just financial technology is Venmo. Venmo is very difficult to deal with in the mortgage world. I'm bringing this up because we see it more and more because so many people do use Venmo. The problem with Venmo is it can be used, it's just painful. They don't make statements. You can't log into your Venmo account and print out a monthly statement. And that's what's required. We want your name, we want last four of your account number, your address, and then all your transactions. And Venmo won't provide that. So for clients that I've had, as an example, a self-employed person, a trainer, I'll say that, and her clients pay her via Venmo. So she gets all this cash and she's got this huge balance in Venmo. She had to go through and do a screenshot, kind of like on the app, but in the website version of Venmo, and screenshot every single transaction, where we ended up with a PDF document that she put together that was 57 pages because she had, 50 deposits and transactions, to where we could show the underwriter, here's what the account started with, here's all the transactions that flow through, and here's her ending balance, and that was acceptable. I would hope Venmo as a company, it's pretty easy reporting to just create a statement for folks, but I think that would be helpful, especially the larger that technology grows and that app is used.
Awesome. Okay, so thank you. That's some great background on tracing where money comes from for proof of funds and applying for a jumbo loan when it comes time to a mortgage. I really appreciate your time today, Sean. I'm Jennifer Goodman, a Realtor in Austin, Texas. I'm here with Sean Andrew of Vista Lending. And if you have any questions about the real estate market or lending, please feel free to reach out to either one of us. Thanks for tuning in, and we will have more coming to you in the future. Thanks so much.